Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very excited to welcome you to our first edition of the Forex Morning Mastery as we prepare for the new week. I hope you all had a wonderful weekend out there and trust you're doing very well and pumped up and ready for another challenging week that is coming for us. That begins today, of course. My own name is Sharif Daramola, and for the next 30 to 40 minutes thereabout, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective with the utmost intent of identifying potential trading opportunities ahead of this week. This week is a very significant week. We need to acknowledge the fact that we are actually during the last trading week for the month of August, and in fact, it usually comes with its own peculiarity, which we are also going to be taking into account while we review the current market structure. We are looking at various factors such as low liquidity. As you know, as the month winds down, many traders and market participants may be on vacation in this time, leading to thinner market conditions, and this can result in more volatile price movement as even smaller trades from key players in the market can have a larger impact on the market. Then the fact that we are at the end of the month era, many institutions like central banks, hedge funds, the big hedge fund players may want to start adjusting their portfolios at the end of the month, which can lead to unexpected price swings in the market. And especially when we are looking at currency pairs, they may experience sharp moves as fund rebalance their positions. And as well, the positioning ahead of the new month, that is the month of September, usually result in a month typically characterized by increased activity and key central bank meetings. So this could also lead to some early moves as the market anticipate upcoming trends. And of course, during this time, the first couple of weeks of the new month usually have high impactful economic events like the NFP data. We are looking at the interest rate decision from major economies in the world, and usually this whole thing usually result in re-strategizing, repositioning ahead of the new month, which could change the current market dynamics a little bit. So we need to take all of this into consideration. We need to be very aware of this, and of course be on standby to capitalize on any opportunities that the market will be presenting to us for this week. And of course, in preparation for today, for this week's session, I have simple trading setups that we are going to be using to navigate the current market dynamics. And we are going to be looking at the three financial assets we usually monitor, that is the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD. However, during the course of the weekend, due to my tight schedule, I wasn't able to drop anything on the GBPUSD or the US oil. I only dropped on the XAUUSD. So today we are going to be taking a top-down analysis on both the USOILSPOT and the GBPUSD before positioning ourselves for the next move. So I encourage us also to stay tuned in so that you do not miss out on these valuable ideas we will be talking about today. And for those of you who are joining us for the first time, you are highly welcome on board. I'm very excited to have you around with me this morning. And it is normal for you to wonder what this is all about. What is it that we really do here on the Forex Morning Mastery? Well, the Forex Morning Mastery was an idea that was born out of the need to do follow-up details on the videos I usually share during the weekend. So during the weekend, I share a couple of videos detailing my thought process and what I think is going to happen in the market ahead of the new week. So during the Forex Morning Mastery, we come here 3 times in a week, Mondays, Wednesdays, and Friday, coming together to have a deep understanding into how markets have been behaving, then do a follow-up details on our position and see how we can manage our existing position, and of course position for the next move. And it's also important for me to mention here that this is not a signal service platform, but an educational avenue where we come together to understand the behavioral patterns of market participants through the lens of price action and fundamental analysis. So once again, I do welcome you on board and encourage you to actively engage in the comment section. You can ask me any questions as regards to the financial market. I'm here and willing to be of help in that regard. And if you have found this content helpful and useful in making your independent trading decisions, I really appreciate your support by giving the video a thumbs up. Thank you very much as you do so. And with that being said, let's dive right into the business. So as always, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market this week. And of course, as you all know, based on the asset we are looking at, we will be focusing on high impactful event from both the United States and the United Kingdom economic docket. Now, by looking at the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, giving us valuable information needed to strategically position ourselves ahead of this event. Now, looking at the assets we are looking at for this week, looking at the asset we are looking at for this week, the event we will be focusing on are high impactful event. And in fact, you would have noticed if you check the economic calendar that we do not have any high impactful event, at least for the first half of the week. The first high impactful event is coming in on Thursday, and we have another one on Friday. We have the core the gross domestic product annualized for Q2 from the United States, and of course we also have the core personal consumption expenditure price index, which is also considered to be an inflationary gauge data, coming in on Friday. And while we anticipate this high impactful event that is likely going to be influencing the sentiment in the market strongly, we cannot ignore the mid-tier economic features as well. Now, if we consider the mid-tier economic features after spooling this out on the calendar, you can see today, Monday, August 26th, in about 3 to 4 hours from now, we are going to be looking at the durable goods order. So we have the one for the excluding defense, excluding transport, and excluding aircraft product. Now, for those of us who do not know what the durable goods order is and what its implications are on the currency market, well, this data here measures the number of new orders placed with manufacturers for long-term, long-lasting items like cars, appliances, and machineries. Now, these goods are expected to last at least 3 years, so they usually collate these orders placed with manufacturers during every 30 days, and during this time the data comes in as durable goods order. And when the durable good order is strong, it suggests that businesses and consumers are confident in the US economy, which can boost the value of the US dollar, of course. And if orders are weak, it may be a signal that economy is slowing down and can potentially lead to a weaker currency. So traders watch this data to gauge economic health and make informed decisions. Now, looking at the data we are talking about here, let's look at what happened during the previous month. Now, for this, the durable goods order, the one excluding defense and excluding transport and excluding aircraft, we can see here they all came in at deficit of 6.7%, deficit of 7.2%, and that for the excluding transportation came in at 0.4% expansion, and that for the aircraft also came in at 0.9%. Now, for the consensus, that is, what is market participant expecting? What are economists saying as regards to their current analysis in the situation of the US economy. They are suggesting that for the month of July, we may likely see an expansion of 4%, which is quite considerable if we take into account the previous month data, which came in at a deficit of 6.7%. And this is going to be a positive signal for the US dollar, but we will have to wait and see what the actual data is going to be like. Will it be just as market had expected, below market expectation, or even beyond what market had expected here? And of course, remember what I said here: if the data comes in higher, it can favor the US dollar positively, and if it drops lower, it shows that the economy is slowing down, and it could affect the US dollar negatively. So this is the only impactful event, let's say mid-tier economic features, that we are looking forward to today. So you do want to be marking out the timing of this event so that we can be on standby to see what structure is evolving before the event happen, which definitely will be giving us a clue of where we are going to be placing our buy or stop orders. Now, later on today, we are going to be looking at the Fed speech from Mary Daly. Mary Daly is the Federal Reserve Bank of San Francisco's president, and of course, she's also a voting member of the FOMC committee. Now, she's going to be speaking in about 10 to 11 hours from now, so majority of market participants will want to be analyzing our rhetorics to have an idea into the current economic outlook in the United States, future policy decision by the Federal Reserve. You know, we are in an era right now where sentiment is going in support of the Federal Reserve cutting interest rate next month. And of course, we had the dovish remark from the Fed chairman during his Jackson Symposium feature, where he did emphasize that inflation is gradually thinning out in the United States, and it is high time that we start cutting interest rate, shifting monetary policies as early as the month of September. So following this very dovish remark, we do want to be hearing what Mary Daly is going to be saying, who is considered to be a voting member of the FOMC, and of course she's going to be voting next month to whether decide if we are going to be cutting interest rate or not. So that's another event we do want to be looking forward to. So besides this, these are what we are looking out for today. I encourage us all to mark out this timing on our chart, as we will be needing them as a reference point in anticipation of this event. And one thing we should also understand is that the anticipation of this event usually has its own way of influencing how market participants will behave. And like I usually say, major key players in the market usually have insiders in this department that will inform them of what the data is going to be like. So with their first-hand information, they usually build up a position ahead of this event, which for us as retail traders, we see as a trail to look out for trading opportunities. So this could come in the form of structural patterns, levels, and chart patterns to use to guide his decision. So this is exactly what we are going to be looking out for on the chart today. So with that being said here, I see you, Sahid Nasir. Good morning to you. Yes, I miss you too. Sincerely, I miss you all. It was unfortunate on Friday. Sorry, I didn't mention that in my opening remarks, though I sent a message out on Friday. We had some internet technical issues which we were not able to resolve in due time, and by the time we resolved it, it was way too late. In fact, I did not do some trades, of course, that I planned to do on that same day, but it's all well and good. Everything is fine right now, and I'm glad to be with you here this morning. So I'm glad to have you around here, Sahid Nasir. So with that being said here, we will be diving right into the business, and as usual, the first asset we are going to be taking on this morning is going to be the USOILSPOT as usual. So on the USOILSPOT, we have quite an interesting situation going on at this point in time. Indeed, I have already I already have a buy position which has triggered at this juncture after after the week has started on a bullish note. Now, before we go into the technical details, we do want to really understand what is driving the sentiment in this market. We want to know what are the factors behind the scenes that market participants are looking at to decide if they will continue to buy or sell the US oil spot at this point in time. And of course, you remember last week we had some significant move. Since the beginning of last week, we were buying the US oil spot. I think during the second half of last week, after that strong plunge during the first half of last week, and from Thursday of last week, we were buying the US oil spot as price continues to find higher highs and higher lows. And it's important we also know why this is happening. Now, to top the list here is the Fed Reserve interest rate cut expectations, which has been driving the US dollar lower in the last couple of weeks. And of course, these growing expectations that the Federal Reserve will cut interest rate is not favoring the US dollar at all. And the US oil spot being a US dollar denominated asset, we do know that if you want to buy the US oil spot, you need to convert your local currency to the US dollar before you can buy the US oil spot. And now that the US dollar is the value of the US dollar is dropping, then it becomes cheaper for other currency assets to buy the US dollar, and then they can actually buy more of the US oil spot and build up on their reserves, their country's reserves. So this for me is a very strong driving factor for increased demand in the US oil spot. And of course, in our simple economics, when demand rises, what happens? Price will definitely rise. So I think this is one of the major factors here that is influencing this uptrend scenario we're seeing in recent times. Then in addition to this is the geopolitical tensions in the Middle East. As you will see, the concerns for potential disruption to regional oil supplies due to escalating conflict in the Middle East is something very significant at this point in time. Now, over the weekend, we saw Hezbollah launched hundreds of rockets and drones at Israel's military bases. And of course, Israel too has been retaliating. I think I had over the news yesterday night that Israel flew over 100 fighter jets to strike sensitive areas within Lebanon yesterday, and this situation has heightened concerns about oil supply stability, contributing to upward pressure on oil prices. So this kind of geopolitical tension is something that usually ginger buyers to continue to accumulate more of this commodity, because we never can tell what could happen. This a sensitive scenario could escalate further, and this could lead to sanctions against Iran, or anything could happen around that area which could affect this. So for this reason, I think this is one of the significant factor supporting the rise of oil prices. Now, besides all of these factors supporting the continued uptrend scenario, we cannot ignore the potentials that sellers could also come into play. And what are the factors behind the scenes that could trigger sellers to come into play? And one of them is the Chinese economic slowdown. So on the downside, there is concerns over a sluggish economy in China. Remember, China is the world's largest oil importer, and this poses a lot of risk on oil prices at this point in time. And we all know that if the Chinese economy is not doing well, it is expected that demand from China will reduce, which can significantly impact the global demand. And if that is going to be the case, we may see a cap in this uptrend scenario. But if China's economy is doing very well, then there is a high chance that demand will increase, and this will also influence price continue to the upside. So now, one of the things we've seen in the last couple of weeks, their manufacturing sector had contracted, though it's increased, but it wasn't as expansive as what we've been seeing in the last couple of months. Now, despite a modest increase in China's oil demand by 200,000 barrels per day in the first half of 2024, this growth is significantly below the average rise seen from 2016 to 2019. Now, this slower demand from China could weigh on oil prices, balancing the upward pressure from other factors. So with all of this information we have here, we have a couple of factors supporting the continued uptrend scenario. But with this whole scenario, we cannot ignore that sellers could also come in after considering the sluggish downturn in the economy in China. Now let's go into the chart and let's see how market participants have been digesting this information and what are the chances the buyers and sellers have as we head into this new week. Now to start with, we'll be scaling up into the higher time frame, and of course you know what we do on the higher time frame. We do want to have an holistic perspective into what is really going on in this market. And what I did here on the daily time frame was to take into account the character of price action since the beginning of this year. Now if you look at the structure since the beginning of the year, one thing that stands out from this structure is the fact that we see that that area between the $72 and the $67.75 area had been a strong demand zone since the beginning of this year. So you can see here that when price comes into this area, when sellers push price downwards, as soon as price gets into the structure, we see buy pressure immediately re-emerge from this area. And I think that this character here shows that market participants find the US oil spot cheap enough to buy whenever price comes into the structure. And this had continued into the month of February. We saw what happened here in the month of June. We saw what happened here in the month of August since the beginning of this month. And last week, as soon as price dropped back into the structure, we saw buy pressure resume from that area. So for me, this is a very good signal that we are within a robust demand zone. And you know how we treat our demand zone. When price is above the demand zone, we definitely want to continue to look out for patterns and structures that supports the idea of buying that particular asset. And with my key level situated at the $72 area, it's likely to continue looking out for buying opportunities around this area. Now for me to consider selling, I would rather want to see price break down that key level and then continue selling. Pressure below the structure will be all I need to continue that downtrend move. So for me to sell at this point in time, I would want to see some confirmations which would reflect on the chart as retest of structure, continue selling pressure on my lower time frame. Then I can start considering selling the US oil spot. So at this point in time, things are looking very bullish. Price is sitting above our demand zone. Price is sitting above our key level, and of course right now price is back above this ascending trend line which has captured the pivot lows since the beginning of this year. Now scaling down into the 4 hours time frame, I think we have a simple structure around that area which we will be using. I think it's still looking like what we saw on the daily time frame, but a little bit of twist to it. Now look at what we have here. So after taking into account the character of price action since the mid-month of July, it's quite obvious the price has been bearish, and if we connect the series of lower highs, we have this beautiful descending trend line. And look at what happened here. During the first week of this month, we saw price break out of the descending trend line, as you will see here. And from a theoretical standpoint, we do expect that price is likely going to come back, retest that structure to continue the uptrend move. And look at what happened here. This was exactly what happened. Price came back to retest the structure last week before we saw this new momentum continue to the upside. So at this point in time, what is going to be our chances for this week? Now, if you zoom into the structure, there is the possibility of price action retracing back into the $73 area that was broken last week to retest it and continue that uptrend move. Something like this, price could likely come into the structure and then retest it to continue the uptrend move. That is one scenario I was considering as at the time I was analyzing this market. And the second possibility here for an uptrend continuation could be price consolidating around this area, probably evolving into an uptrend continuation pattern, like let's say pennant, bullish flag or bullish rectangle, then a breakout of the structure will be all we need to confirm the strength of the buyers at this point. So you can see, let's scale down into our execution time frame so we can see how the market has been reacting to the structure since the beginning of this week. Now, scaling down into the 1 hour time frame, we'll begin to see things clearly. So I was able to identify a structure here, which led me to trigger a buy position after price broke out of that structure. So as you can see here, this is what I was looking at after monitoring the character of price action since the new week has begun. So we saw the week started at around the $74.80 level, 88-cent level. Then we saw price climb up with an engulfing bullish candle, and then we saw how the $75.48 area became a barrier throughout the Asian session. And of course, this for me was a good signal that a breakout of that resistant line will be all I need to continue that uptrend move, and that is why I had my buy position triggered at those points in time. Now, will this momentum continue? Well, let's wait and see how this is going to play out in the next couple of hours as market participants look forward to the durable goods order coming up in about 3 to 4 hours from now. Now, for those of us who had missed out on this opportunity, it's all fine and good. The week is still very early, so we still have enough time to capitalize on more opportunities around this market structure. So if you had missed out on this opportunity, well, we can exercise patience and see if the market will come back to retest the structure. If it does, continued buy pressure around this area will be all we need to continue the uptrend move. However, it's not all the time the market follows this theoretical expectation. At times, market does not come back to retest structure as it continues to climb and find new highs. So if that is going to be the case, then I will be marking out this highest point that price action has been for this week, which is exactly at the $75.81 level. So we want to be marking that level out on our chart, placing a buy stop order above that structure to continue that uptrend scenario. So we have the $75.81 level. So let's duly mark that out on our chart, as we will be using that to maximize the potential of this bullish move. So here we go. So we have another structure there. Price breaking out of that structure will definitely welcome buying opportunity. And for those of us who had already joined that first entry, as soon as the second position gets triggered, kindly move your stop loss on the first positions to break even, as we continue protecting your position as we continue to monitor price action. So this is my simple view as regards buying the USOILSPOT today. Now, in as much as we're looking out for buying opportunity, remember we had a structure on the 4 hours time frame, which I did show you earlier, where there is the possibility of price retracing back into the $73 area before the uptrend begins again. Now, if that is going to be the case, that is, if sellers take over this market, maybe depending on what the durable goods orders say, maybe it favors the US dollar in one way or the other. What are the structures, or what are the things we want to see on this chart that will make us feel comfortable joining a bearish move? Well, first of all, we do want to acknowledge the fact that we have a range bound structure here, where the support line of the structure is at the $74.80 level. Now, for me to sell, I would rather want to see price break down the $74.80 area. Then I will feel comfortable joining a bearish move. And in fact, if we look at the distance between here and the $73 area, we are looking at over 150 pips to catch there, if that is going to be the case. Then, besides the support line of this range bound structure, I want to acknowledge the series of higher lows at this point. Now, if we mark out the series of higher lows here, look at what we have at this point. So we have an ascending trend lines to guide our trading decisions at this point. So look at what we have here. We have ascending trend lines, and then if we connect the series, so you can see, let's do some readjustment. an ascending trend line, and you know how we treat our ascending trend lines. As long as price remains above the ascending trend line, we will feel comfortable in our bullish idea. So if price breaks down this ascending trend line actually, and we continue to see selling pressure below the structure, this could trigger some sell position even before the breakdown of the support line happens. But trust me, I will be with you in the comment section of both my Trading View and Telegram platform to give you updates as at when due. So this is my simple view on the US All Spot for today. I hope I made myself very clear. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right. So in the absence of no questions, I want to assume that we are all on the same page, and I do hope you've marked out those levels accordingly on your chart, as we will be needing them as a reference point guiding our independent trading decisions today. And in that, okay, so I just saw your comment there, Sahid Nasir. Okay, he says, I'm unable to join Go Challenge. I have tried several times, but nothing works. So please help me in this. Oh, I'm very, very sorry to hear that, Sahid. I don't know why that is. What prompt is it giving you? Is it giving you a specific prompt? Probably giving you some instructions to do. I would really want you to look into that. Is it that you are not able to find the button where you click for the Go Challenge option? Once you click on that link, we have two options. We have the Patron Pledge and we have the Go Challenge. So if you're going for the Go Challenge, you click on the Go Challenge and you follow the prompt accordingly. So I don't know how YouTube works in your region, so it depends on how it does. That will be dependent on your payment options. I don't know. So what prompts is it giving you, and if there are any technical issues, you can easily contact the YouTube contact the support team, and they will be willing to be of help in that regard. All right, so with that being said, let's go right into the next asset on our watch list for this week. Stay tuned in. All right, everyone. So the next asset we are looking at is the GBPUSD, that is the British pounds against the US dollar. And of course, we've seen in recent times how the British pound has capitalized on the weaker US dollar to build on a momentum ahead of last weekend. And of course, the pair right now is trading at a 2.5-year high around the 1.32 1.322 area since last week Friday, and this strength is fueled by a weakening US dollar following that dovish remark by the Fed chairman during the Jackson Hole symposium that ended last week Saturday. Now, with all of these factors in sight, despite the Bank of England's reluctance to offer a preset rate cut path, the pound sterling continues to perform strongly against most of the major currency at this point, especially the US dollar in this case scenario. And of course, at this juncture, the question right now is whether or not this momentum will continue, especially in a week like this that does not have any top tier UK economic data to look out for, fresh impetus that would drive the pound sterling. However, one thing we need to indeed consider is the weakness of the US dollar due to the Fed interest rate cut, and the Bank of England, on the other hand, due to this resilient data coming in last week, may not be keen on cutting interest rate next month. So before, it was expected that there will be a back-to-back interest rate cut by the Bank of England, but with the way things are going, remember last week we saw the GDP from the United Kingdom coming in at 0.6% expansion, higher than market had expected. We also saw the inflation data also coming in a little bit higher than market had expected. Then we also had the retail sales data as well, which was also higher than market had expected. So the resilient data from the United Kingdom will not be supportive of an interest rate cut next month by the Bank of England, and this could further favor the pound sterling, driving that momentum further to the upside. Now, besides that, we also have upcoming US economic data for this week. We talked about the durable goods order coming up later today. We also have the core PCE coming in on Friday, and of course the US GDP for quarter 2 coming in on Thursday, which could also bring some fresh impetus into the market. So we need to take all of this into consideration, and in fact, with no top tier economic feature from the United Kingdom, there is a high chance that we could see an extended sideways trading activity prior to the release of this data, where market participants will be, major key players will be waiting forward to before making any aggressive bet at this point. Now, with all of this factor in play, how is the market digesting this information on the chart? Of course, we do know that our price action will tell us how market participants are behaving, and of course give us a clue of where is likely majority of the market will be heading to for this week. Now, for us to have a clearer picture into what is going on in this market, we shall go into the daily time frame. Of course, let's have an holistic perspective into what is really going on here. So I think my analysis started from the 4 hours time frame, I guess. Okay, I started my analysis from the 4 hours time frame, as there's nothing really much to talk about here on the daily time frame, as the price is right now at a 2.5-year high. And in fact, we don't know if price will do a retracement before continue the uptrend move, or will it just form an uptrend continuation pattern to continue the uptrend move. So what I did here on the GBPUSD chart was to take into account the character of price action in the last couple of weeks, which emphasized the strength of the buyers in this market. And of course, if we do connect the series of higher lows here, you can see we have a couple of ascending trend line which has been supporting the bullish momentum. So we have one right here, which is the fainted one you can see right here, and of course I have a second one which captured the character of price action last week, as you will see here. Now, one thing we need to understand here is the fact that price action is sitting above our trend line, and as long as price sits above our ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying. We will not be selling unless this trend line is breached and broken to the downside. Now, in addition to that trend line is our key level situated at the 1.31200 area. Now, if you look at this level here, at a point last week, this level was serving as a barrier for buyers, as every attempt by buyers to break out was duly rejected by sellers, as you will see here, pushing price to the downside. And not until after that dovish remark from the Fed chairman, we saw price break out of that structure with an engulfing bullish candle, further emphasizing the strength of the buyer. So for this week, our key level is going to be at the 1.31200 area, playing a significant role in guiding our decisions for this week. Now, for those who are joining us for the first time who do not know how we use our key level, let me simply put here, our key levels serve as a key determinant factor in guiding our decisions, and of course it also makes us feel comfortable in whatever positions we are taking. Now, for instance, if price remains above the key level, we only want to be thinking of buying ideas, buying opportunities, and if we're in a buy positions, we feel very comfortable if price still remains above that key level, and of course we do not have any jitter at all. But if price breaks down our key level and continue to find selling pressure below that structure, we definitely want to be looking out for selling ideas. And if we're in a sell position below our key level, we feel a little bit comfortable around at that area with that position in play. Now, with that being clarified at this point in time, what is going to be the path of that the price action is going to be taken for this week? Now that we have a breakout of the key structure at the 1.31200 area, from a theoretical perspective, it is expected that at some point in time price may likely come back, retest the structures, which beautifully shares a confluence with that second ascending trend line to continue the uptrend move. That is one possibility that we will be looking out for this week. That is one scenario. And then the other scenario is if price action will continue to consolidate, maybe transition into a range bound structure. It could come in the form of an uptrend continuation pattern, like a bullish flag, pennant structure, bullish rectangle pattern, whichever case it may be. And of course, if that is what happens here, then the breakout of the resistance line will be all we need to continue the uptrend move. So that is the two scenarios we are going to be looking out for to join any buying opportunities around this area. Now, for me to consider selling the GBPUSD, I would rather want to see price break down both the ascending trend line and the key level, something like this, breakdown, retest of the structure to join a bearish move from a long-term perspective. But if we are looking at things from a short-term perspective, we could likely see signals around this area that could project selling ideas, which I will be detailing when we scale down into our execution time frame on the 1 hour time frame. Now, with this information we have gathered here on the 4 hours time frame, let's go down into our execution time frame, that is the 1 hour time frame, where we do want to see how market participants have been reacting to this current structure following the latest development in the financial landscape. Now, scaling down into the 1 hour time frame, we'll begin to see things more clearly. In fact, I have a structure here that we are going to be using to navigate the structure, at least for the first half of the week. Now, since the new week has begun, you can see that price action has been confined within a range bound structure that is between the 1.32225 level and the 1.31915 area to emphasize the prevailing uncertainty in this market at this point in time. And this is not coming to us as a surprise at all. Remember, I did mention earlier that the anticipation of this major event coming in from the United States later in the week could result in major key players stepping aside, especially on the last trading week of the month, stepping aside, waiting for this event to emerge before taking aggressive bets in whatever direction, depending on what comes out on this event. So as a result, we may see extended sideways trading activity, and of course it could also evolve into an uptrend continuation pattern where the breakout of the 1.32225 level welcomes more buying opportunities, and the further breakout of the highest point in the last 2.5 years at the 1.32300 area will welcome more buy positions at this point in time. Now, talking about the counter trend potential of this market, that is the possibility of price action dropping back into structure to retest it and continue the uptrend move. Well, if you are a counter trend trader or a scalper who is willing to take such risk, well, you can be looking out for a breakdown retest of this support line here before jumping into a sell position. And I mean breakdown retest of structure. So you do want to be looking out for confirmations before considering selling. Remember, this is a counter trend opportunity, and you really do want to see a confirmation that truly sellers are taking charge of this market before jumping into that sell position. So a breakdown of structure first of all should happen. That's our signal, and then we want to see a confirmation on our lower time frame, like the 5, 10 or 50 minutes time frame, looking out for retest of structure before jumping into that sell position. That is very, very important. Now, if you are not comfortable taking counter trend opportunity and price breaks down the 1.31915, well, then you have to wait patiently for price to come into the structure, where we will be looking out for double bottom structures, inverse head and shoulder patterns, or any form of reversal pattern, breakout retest of neckline to continue the uptrend move. So this is what we will be looking out for on the GBPUSD for the first half of this week. So we have a simple structure, a range bound structure, where we shall be exercising patience, waiting for either the breakout or the breakdown to give us a signal of where price action is likely going for this week. So let's see what will happen prior to the event, the durable goods order, and after the event. And if anything strange or new comes up, I will definitely give us updates on both my TradingView and Telegram platform. So I do hope I made myself very clear there. If you have questions or you need some further clarifications, feel free to let me know in the comment section. I'm here and willing to be of help in that regard. And that reminds me, I'm looking at the likes right now. We have over 10 people on board, and the likes are still falling below the number of people watching this video. So let's make the like tally with the number of people on board. We only have 4 likes, so if you are yet to click on that like button, please do. This is one way you can support this community to grow, and of course another way you can inspire me to continue to do more of these sessions on a weekly basis. And thank you very much, guys, as you do so. So with that being said, I will be moving right into a break right now for about 10-15 seconds. Let's see if there are any questions before we move on to the final asset on our watch list today. Thank you. All right, so I see a question here from Saeed, and Saeed is asking that what should be the confirmation pattern we need to see at the 1.31915 level. All right, very good question there. So like I did mention earlier, I did explain this earlier. We want to see a signal first of all, and the signal will come in the form of a breakdown of the structure. So the signal comes like this: breakdown of structure. Then we exercise patience, go down into the 5, 10 or 15 minutes time frame to look out for signs that buyers are finding it difficult to climb back above the 1.31915 level, and this usually reflects on the chart as continued selling pressure below the structure on our 5, 10 or 15 minutes time frame. And if this is seen and observed and confirmed, then we can actually join that bearish move to the downside. And make sure you have your stop losses around. It's very, very important. No trade is confirmed that it will hit our TP target. So every decision we are making is more or less an educated guess until price action hits your TP target. So you want to be having a stop loss in place. Make sure it's above the previous high here around the 1.32120 or 32150 area, dovetailing to about 15 to 25 pips depending on where your entry point is, and of course see that trade run its course. So that is how we are going to be managing any counter trend opportunity here if you are really a counter trend or scalper of the financial market. So I hope I made myself clear there, Said. Did I? If I didn't, please let me know so I can make some clarifications further. I see you, Ismail Napari. Ismail, how you new with us here? Good morning. Glad to have you around with us. And Ismail, oh, thank you very much. I really appreciate that compliment. So you're asking that, please, how can I join the Go Challenge? Of course, you can join using the links right in the description box of this current video you are watching. So please check the description box below. Click on the link, and then it will prompt you to the page where you will be joining the link. So we have two options there. We have the Patron pledge, and of course we have the Go Challenge. So click whichever one you want, and it will take you to that area. I hope I made myself clear there. Ismail, you are very much welcome, Saeed. All right, guys, so I think in the absence of no further questions, I'm of the opinion that we are all on the same page, so we should be moving on to the next asset on our watches. In fact, I'm running out of time. Go Challenge supposed to be starting in another 5 minutes from now, so let's see if within 5-10 minutes I can run through the final asset on our watch list. All right. So the final asset on our watch list for today is my favorite asset amongst them all, and that is the XAUUSD, popularly known as the gold spot. And in fact, gold is on fire right now as price continues to find new highs, breaking new records and making new records along the line in the last couple of weeks. And of course, this is not this is subject to the weaker US dollar we have been experiencing, especially after the Fed chairman's dovish remark, where he did mention that it's time that the time has come for policy to adjust, and this has further reinforced the growing expectation of a rate cut in the month of September. And of course, the July FOMC minute, which I didn't mention earlier, revealed that most Fed officials are aligned with this view, and this has further increased a sentiment in favor of a rate cut this year. Now, what we are not sure of is what is the magnitude of this rate cut, and of course the Fed chairman gave an insight into that, as it did say that it will be looking forward to labor data to decide if it's going to be a 50 basis point cut or a 25 basis point cut. Now, in that regard, the next labor data we are looking forward to is the NFP, which is coming up next week. So that might likely be the last piece in the puzzle to decide what magnitude the interest rate cut will be. And of course, if we look at the sentimental view using the CME Fed Watch tool, we have the rising probability of about 36.5% of market participants considering that the cut will be higher than 25 basis points. And of course, there is the chance that we could see like 3 or 4 rate cuts this year, and this is further escalating the price of gold, finding new highs in this in that regard. Then another thing I mentioned, for those of you who saw my last week video on the XAUUSD, I did talk about the potential of Western investors coming into the market. Now remember, the gold market has been what word will I use there? Has been monopolized, but let me use that word. I'm not sure if that's the right word to use anyway, but it has been monopolized by the Euro-Asian market, where topping the list is China, India, Russia, Uzbekistan. These countries have been buying gold for the last 18 to 24 months in this market, and this has escalated the price of gold. Now that interest rate is likely going to be cut in the US, I think that Western investors are likely going to be coming into this market, repricing gold higher in the next couple of months. And in fact, from what I've been reading and seeing in the news, it's majority are looking at a 2,500 2,550 mark. That price might likely reach this year before it tumbles again. Now in that regard, if you look at this alone, the path of least resistance for gold is still looking very, very bullish. Now, besides this, we have the geopolitical and economic tension as well, which is also supporting gold prices. We have the escalating tensions in the Middle East, particularly the conflict between Hezbollah and Israel, which are expected to increase the safe haven demand for gold assets, copper, silvers, and the like. However, the sluggish demand in China, the world's largest producer and consumer of gold, poses a potential risk to gold's price stability at this point in time. Now, this creates a complex dynamic where geopolitical concerns could drive gold's prices up, while the economic challenges in China might cap these gains at the same time. So we need to be very, very careful within this whole market dynamic. So as soon as price moves significantly in our favor, we do want to be moving our stop losses accordingly. Then another factor that will be influencing the sentiment in this market is the anticipation of the key economic data coming up later in the week from the United States. Today we are looking at the July's durable goods order from the United States. We're also looking at the GDP Q2 from the United States coming in on Thursday, and of course we are looking at the core PCE data coming in on Friday, which is considered to be an inflationary data. So we want to see what this data are saying, and this could bring some fresh impetus into the US dollar market dynamics, which indirectly will be influencing the gold commodity and of course the US Treasury bond yield. So we shall be looking, as the anticipation of this event has its own way of influencing the sentiment in the market. And of course, let's look at the chart to see how the market participants are really anticipating this major event. Then I do want to say here that we are not going to be going into the higher time frame on the gold commodity, as I already done a top-down analysis on the gold. So if you missed out on my weekend video, please check the link right in the description box below. There I did give you a top-down analysis of this gold asset from the higher time frame. So right now we are on the 1 hour time frame, which is our execution time frame, and in fact I already have a buy position triggered as at this point in time. And for those of you who saw my commentary on the gold commodity this morning, you too must have had a buy position triggered at this point in time. And if you have done so, well done and kudos to you. Now, why did we buy the gold this morning? Well, there are two factors that are supporting this bullish trend. Technically, we've talked about the fundamental factors. So technically, there are two factors supporting, or let me say three factors here supporting this bullish trend, this bullish idea this morning. Now, the first one here is the ascending trend line after capturing the series of higher lows since last week Thursday, and after connecting the series of higher lows here, we have this beautiful ascending trend line. And you know how we use our ascending trend line. Of course, as long as price remains above them, we will continue to look out for buying opportunity. This is a rhyme I usually say every now and then, so it sinks into our subconscious mind. Then secondly, we have our key level, which is at the 2,495. I encourage you to watch my weekend video on the XAUUSD for those who missed out on how we were able to identify the 2,495, an area which has been a key determinant of price action in recent times. So please check my weekend videos on that one. So price remains above the ascending trend line, remains above the key level. This enough is supporting a bullish idea here. And thirdly, after monitoring the character of price action since the new week began, you can see we have a range bound structure where price was initially confined within the 2,517 and the 2,509. That's about a $8 range bound structure. And of course, you know how we treat our range bound structure. Whenever price remains within a range bound, we exercise patience, waiting for either price breaking down the support line to give us an opportunity to sell, or breaking out of the resistance line to give us an opportunity to buy. And this is quite obvious. We have seen price break out of the resistance line of the range bound structure, triggering our first buy position for the week. And if you are taking advantage of that move, you will currently be running with a minimum of 78 pips in profit at this point in time. And for those of us who did capitalize on this opportunity, it is high time we moved our stop losses and secure this position. The anticipation of the US durable goods order could likely bring some volatility into this market, which could take price back into the entry point. So secure some profits, maybe around the 2,520 or the 2,519 area. Move that stop loss there. At least you will be having about let's see how many pips that is, between 33 to 25 pips profits maybe, and let's see how far this momentum will go. Now, for those of us who missed out on this opportunity, it's okay. We still have enough time this week to take advantage of trading opportunities the market presents to us. Now, one thing I will tell you is, let's see if the market will come back and retest the structure, which personally I doubt will happen due to the strength of the gold at this point in time, considering all the various fundamental factors we talked about. But if it does come back to retest the structure that was broken, you can see how it beautifully lines up with that ascending trend line. Then continue buy pressure around this area will give us an opportunity to continue the uptrend move. And for those of you who will be with me during the go challenge, you will see how we will navigate this. You know, the go challenge is all about scalping the market, so you'll see how we are going to be scalping through this current market structure for today's session. So I look forward to seeing you guys in that session. Then if price continues to climb and find new highs, we have the highest point here at the 2,532, where a breakout of that structure will be welcoming buying opportunities. So I do have another buy stop order around that area to maximize the potential of this bullish move. Now, in as much as the path of least resistance for gold is looking very, very bullish, we cannot ignore the potentials that sellers could also come into play. And if they do come into play, what are the things we want to see that will happen that will make us feel comfortable joining a bearish move? Personally, I doubt if selling potential will come in, but you never can tell what the market can do. The market is an uncertain environment, and because of this, we want to always be on standby for whatever opportunity the market presents to us. Now, with this in mind, what are the chances that price could give us bearish potentials? Well, first of all, I would like price to break down the support line at the 2,509 for me to join a bearish move, but I still think that we could see some selling potential even before the breakdown happened. That is, if price action breaks down this ascending, breach this ascending trend line to the downside, like a breakdown, retest of structure, then I will feel comfortable joining a bearish move to the downside. So let's see how the market will play out now. It's subject to what happens prior to the durable goods, prior and after the durable goods order, that will determine what will happen around this area. But make sure you move your stop losses, secure your profits at this point in time, and let's see how far this momentum is going to go. So this is my simple view on the XAUUSD. I hope I made myself very clear, and if you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions, and then we'll come back here again to round off today's session. And don't forget to give that video a thumbs up before you log off from the session. Your supports are really going to be appreciated. Thank you very much as you do so. All right. So I can see a couple of comments here. Hello, Sharif. Good morning to you. Glad to have you here. Said says here, instead of YouTube, are you able to create a Telegram channel to provide signals? It will be easier for all of us. It depends on what you mean by signal service anyways. I do have a Telegram platform where I do give market updates. You can find it scrolling at the bottom of your screen right now, or you can look into the description box of this current video. There is a link there that will take you to my Telegram platform where I give updates after this Forex Morning Mastery. For instance, on Tuesdays when I don't do the Forex Morning Mastery, I give morning updates, and if there are any new developments in the market, I share them during the course of the day on that platform, and of course on my TradingView platform. So you can check out the Telegram platform. The links are right in the description box below or at the bottom of this of the screen, scrolling at the bottom of the screen. Then I see, please also, okay, what's, I can see, Said says right now the join link only shows your channel to no landing page as it's not available in our country. Oh, that's that's beyond me right now, I guess. So that means YouTube pack is not available in your country, and if it's not available, I guess there's nothing we can do about that except you use a VPN which circumvents the ISP in your country. I don't know if that can work, but that's beyond me if it's not in your country. I'm sorry about that, Saeed. Now, this other question here from Saeed. Saeed says that please also explain the impact of CB tomorrow on gold. What's CB? I'm not sure I know what CB is. I'm not sure I know what CB is. Please clarify. Okay. All right. So while we wait for Saeed to clarify what CB is, don't mind me. I'm not used to all these initials, or so just tell me and I will see what I can say about it. All right. Okay, consumer confidence. Okay, so are we having a consumer confidence report tomorrow? I'm not sure we do have a okay, so yes, we do have. All right. So consumer confidence, you see, this consumer confidence here is not a high impactful event. We do have the consumer sentiment index, which is published by the University of Michigan. I think mid-month, we usually see it during the mid-month. But what simply the consumer confidence really means is that it's like a survey which details how consumers in the US economy feel about the US economy, about the economy. Are they willing to spend money? If they are willing to spend money, it shows that the US economy is doing very, very well. And if it's doing very, very well, it influences the US dollar positively. And of course, you know what happens to the gold when the US dollar increases in value. The gold tends to drop, as majority will drop the gold to buy the US dollar at that point. So the consumer confidence is just a way for market participants, investors, and traders to know if the US economy is buoyant, if consumers are willing to spend money or not. So this report will tell us that, and I think there is a gauge between 0 to 100. I think anything above 50 is considered as good, and if it goes to 70, 80 is considered as extremely good, and if anything below 60, 50, it appears to, that's I think average or so. So it depends on what happens. But for this consumer confidence reports, it's not really a significant event like that that could influence the US dollar strongly. The one that usually does that is the consumer sentiment index from published by the University of Michigan. So I hope I clarified that on that one, Saeed. So with that said, I think we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys today. I really appreciate your support. For those of you who clicked on the like button, thank you very much. I really appreciate from the bottom of my heart. And for those of you who are yet to do so, please do so, and let's make the number of likes tally with the number of people on board. And thank you very much as you do so. All right, Saeed, you are very, very much welcome. I love you too. So as we come to the end of today's session, we were able to take on all the 3 financial assets on our watch list for this week, which includes the USOILSPOT, the GBPUSD, and my favorite, the XAUUSD. And we were able to identify simple trading setups that we are going to be using to navigate this market dynamics, at least for the first half of the week. And I do hope you marked out these levels accordingly on your chart, as we are going to be needing them as reference point to guide our independent trading decisions. If you have done that, well done, kudos to you. So all we need to do right now is exercise patience and allow these structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy which will be consistent through all your trades. And for those of you who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here today. And in fact, trust me, the more time you spend with us, the better you get to comprehend my analytical approach, which eventually will help you in developing your own personal trading strategies. So I look forward to seeing more of you same time on Wednesday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare ourselves for the second half of the week, which promises to be another opportunity to catch some volatile moves as market participants look forward to the GDP and the core PCE data, and of course looking forward to the end of the month, which usually has its own peculiarity for high volatility. So I look forward to seeing you on Wednesday, guys, and I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.